Hello everybody, welcome back for another video. Today I'm going to tell you how to day trade without losing your money. Now you're going to take losses when you trade, but I'm going to tell you how to mitigate that and keep the stair steps going upward. Number one, don't buy a system. Don't buy trade alerts. Don't buy robots if you trade Forex. Just don't buy those. Most of them don't work and you'll never get your money back. You will lose money. You will learn nothing. And maybe even worse, you will blame the system for it. Could well be the system isn't profitable. Most of them aren't, but some of them probably are. But you'll blame the system for your trades. You're the one pushing the button, regardless of what you're following. You want to follow some system or some trade advisor? You're the one pushing the button. So those results are on you. What you need to do is learn to think for yourself. Make your own trades. And then you can take responsibility for the wins and the losses. Number two, risk a small amount in a real account. Now, if you haven't started anything, don't do that today. You got to learn how to trade. You got to come up with a method that you're comfortable with and that you trust. And you got to play around in a demo account for a little while to learn how the platform works and to get some experience making these trades with this method that you're learning. Once you get some confidence in that, put a little bit of money in a real account and trade with very small risk. The only way you're going to see what it actually feels like and to train your mind and your body to react to losses and wins, to make good decisions. I would say risk a maximum of 2% per trade in a small account. Don't even trade a larger account until you're consistently profitable in a small account. I mean months of continued more equity at the end of the month than you had at the start. It's next month, same thing, you're ahead the next month, ahead the next month. A few months of that at least before you put any more money at it. In my experience, every time you increase your position size, you're going to slide back a little bit. So wait until you're really comfortable on a certain position size. If you built that account high enough that you can start trading larger, great. If you're confident and you want to put a little bit more money in it, great. Be prepared to take some losses when you first increase your position size. Number three, this is hugely important. This is what will keep you in the game. Have a daily, weekly, and monthly circuit breaker where if you lose X amount, you quit trading for the day, the week, or the month. This is absolutely imperative. All the pros have this. Every successful trader I've ever met or talked to has it. My take on this, the way I do it myself personally, make that maximum daily loss so small that you can come back the next day and make it back in one good trade. Just one good trade. Now maybe not one average trade, but one good trade. The way you're going to blow up your account is if you let your lizard brain take over. You take a loss, you try and get it back, you take another loss, you keep taking another loss, or maybe you don't have a stop loss and you just watch it go against you. That's how you blow up an account. If you trade today and you're down 50%, how are you going to feel tomorrow? Even if you're profitable, it's probably going to take you a month to get back to break even. That's not feasible. You're not going to last that way. We're all going to have losing days. So make those losing days so small you can fix them in one trade the next day. And if you have a losing day again, well, you're still coming back to a small hill to climb. And that's going to be so much better for your morale and for your psychology. For me personally, my daily limit's 5%. If I lose 5%, I'm out for the day. My weekly limit is 10%. My monthly limit is only 15% because I don't want to ever be down that much. Now, I've never hit that since I've implemented it. But I don't want to have a 25% down month or a 50% down month. No way. If you get to the point where you're down 10%, there's something seriously wrong with you or your method or just the cycle the market's in. Cut your losses. Take a break. You can always come back later. The biggest thing is to make sure that whatever hole you have to climb out of isn't that deep. Don't do anything that'll sabotage your morale or your ability to come back tomorrow and stay in this business. Another thing, put yourself into timeout after a loss. You know, if you got kids and they're starting to misbehave, you know what that's like. You put them in timeout. Well, when you take a loss, your first instinct is going to be to try and make it back right away on the next bar. Guilty? I've done that many times too. What's going to happen is you're just going to keep digging a deeper hole because your lizard brain has taken over and you're not thinking rationally. So I still do this. If I take a loser, I take a minimum 5-minute break. Now you can see how long it takes for you. It doesn't have to be an hour or something so that you're going to miss a move, but it's got to be long enough to get yourself settled and to sort of see if that original move that you traded on played out or not. There'll be lots of other trades to take. The real secret to success in this business is gaining a true, real understanding of how the market works and how to trade it, and making sure that you implement measures to keep you in the game until you achieve this. I hope some of these things will help you along your way. If you have any questions, ask them in the comments. I'll try and answer them, maybe even make a video about it. And please sign up for my newsletter in the description. It's free. It's always going to be free. I'm just trying to have some fun and spread some knowledge. I'll give you little tips and tricks maybe every week or so on some of the levels I'm looking at in the markets I trade. Thank you so much for watching. Please like the video, subscribe for more, and I'll see you in the next one.